please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Mahindra's Q4 numbers on your screen, and it looks like it's better than what the street was anticipating. The company has delivered a dollar revenue growth of $1,244.3 million. That is a growth of 2.9% on a quarter-on-quarter basis versus street expectations of 2.5%. So there is a beat on the company's top line. Margins too have expanded by 110 basis points at the EBIT level to come in at 13.8% versus 12.7%. Again, better than what the street was anticipating. And I think there is a big jump in the company's profitability. So I'm waiting for the PAT figure to come up for you on your screen. But as far as I saw, I think it was 1,222 crore. That would imply a growth of nearly 30% on a quarter-on-quarter basis. So we'll try and find out if there was another element to the bottom line. Yes, there you go. A 30% increase in the company's profitability on a quarter-on-quarter basis, and much better than what the street was anticipating. So Tech Mahindra has delivered a beat, a dollar revenue growth of 2.9%, margin expansion of 110 basis points, driving a 30% increase in the company's profitability. We'll await some more color on the constant currency, how the telecom vertical has done for them this time around. But in the meanwhile, let's get in a few reactions. Ravi Menon of Elara Capital joins us on the phone line. Ravi, is it a beat for you compared to your own expectations? And the stock has already done well. It's seen a 40% rally since the start of the year. Are these numbers in the price?
So, see, this is exactly in line with my expectations, pretty much. On revenue, slightly below, because I was probably expecting, a slightly higher number, because the quarter four is usually a very strong quarter seasonally for them with LCC. And even, for Combibo. And even LCC, Jan to March should be a better quarter for them. That's what they had said, at the time when they had acquired LCC, that October to December was the slowest. So we should see that rebound too. So overall, we were looking at 3.1% in dollar terms and 2% in CC. So I think that's pretty much in line to slightly below. And EBIT margins, we were expecting about 13.4%. And at EBITDA level, we were looking at 17.3%. So I think that's pretty much it.
Yes, so unexpected.
You're right, there is a beat. Yeah.
Okay. Okay, so there is a bit of a beat. Yes, the other income has gone up quite a bit. So the other income has actually doubled on a quarter-on-quarter basis, 451 crore versus 226 crore. So doubling at the other income level, which is what has driven that big beat on the company's profitability, which could drive some EPS upgrades as well. Sanjeev Bhasin of IIFL is also here with us now. Sanjeev, your initial take on the numbers?
Well, in line to a beat on the numbers, I think in the large cap stocks after TCS, this would be the second best numbers we've seen, and definitely it warrants why the stock has been an outperformer, and I see no reason why it should not continue. The margins have pleasantly surprised on the upside, and we'll wait for the constant currency guidance, but I think very, very good numbers.
Okay. Only the telecom vertical continues to be quite lackluster for them. So I haven't calculated, but the telecom contribution to the overall revenue has come down by 120 basis points on a quarter-on-quarter basis to 41.6% versus 42.8%. So telecom has underperformed for them this time around. Karan Torani of Daulat Capital is here with us. Karan, do you think there will be EPS upgrades for Tech Mahindra based on what you've seen?
Yeah, there will be EPS upgrade, based on the margin improvement which is there. We don't expect a sharp improvement in the margin. Despite the seasonally strong quarter, there will be an EPS upgrade because of margin.